Most millionaires are born in recessions. Are they? We're going to talk about it in this video. This video topic is actually partly inspired by another YouTube channel called One Rental at a Time. I'm going to link their video and tag them as well in the description so you can check out their original video. They approached this from a different angle, but I thought it was pretty inspiring and allowed me to put my own perspective on it, because this is definitely one of those, cliches that has floated around and really caught traction on the internet that I think needs a little bit more attention. A lot of people actually take it at face value and start to structure their financial and investment plans around economic cycles, and it's not the best idea. So we're going to get into it in this video. This is JP from Blueprint for Prosperity. We're going to get right into it. So the topic at hand is the cliche, as stated, millionaires being born in recessions. So when you think about what a recession is, economic cycles, when you think about what this is and how it works, you basically have four cycles that we at least document in economics in this country. It basically revolves around the, upward trajectory, flat trajectory, downward trajectory, and flat to the bottom trajectory of our economy. Basically, there's other terms for it, but it's basically just pointing to an economy in, pretty significant growth, an economy that's pretty flat, but flat in a higher range, an economy that's in a trough, hit it down, and then an economy that's flat to the bottom. It's not growing, it's not in good shape. Recessions are pretty much going to be when the economy is 2 consecutive quarters, technically, the technical terms, 2 consecutive quarters of negative GDP growth. We are right now in very interesting economic times where we are dealing with reasonably dangerous inflation and GDP decline multiple quarters in a row, or at least 2 at this point, if I'm not mistaken. So when you think about that, that means that at this time, like we're experiencing, money is slowing in the system. Credit is typically tightening in the system. Recessions, some of them are short and light, some of them are long and deep. The reality in the situation is that recessions typically are not favorable economic times, hence the title, hence the name. When you think about the concept of what births a millionaire, you're generally looking at a combination of factors that helps a person, along with their own hard work, planning, diligence, etc., to exponentially grow their financial position. Some of those factors that come together are diminished when you are in a recession. And again, that's going to be the flow of money, the flow of credit. Could be higher interest rates like we're dealing with now when inflation being, in the case. There's a series of factors that go into a recession that make it a bit harder for money to move around on average. Recessions also are accompanied by a depression in assets. So the concept is, behind the whole millionaires being made in recessions is that assets become cheaper and you can buy them at discounts and ride them up when the economy starts to recover. Cool, okay. But there's not a lot of respect for the fact that there are challenges that transpire during a recession that make it harder for people to get their hands on those discounted assets. So right now, let's talk about lending, for instance. Lending is tightening right now for various reasons, mainly due to a banking crisis, which is subsequently due to higher interest rates, which is subsequently intended to cool down the economy. Hopefully you followed that just now. So if you have tighter lending, you have rougher lending standards. What that basically translates out to is that there's higher criteria to qualify for credit. So if that's the case, then your ability, for instance, real estate is a really good example. Typically, most people invest in real estate through leverage, credit. If it's harder to get it, then I think it might be reasonable to say that in itself might make it less feasible for more people to be successful investing in real estate. Similar phenomenon in the stock market. The stock market is a major indicator and oftentimes can be a leading indicator. Usually it's, able to see things in advance and react a little bit in advance. So the stock market is one of the first things that'll tell you when you're in a recession, when we're coming out of a recession, etc. The stock market tends to drop, broadly speaking, not every single stock, but broadly speaking, the stock market tends to drop double digits when we're in recessions. So 10+%, 20+% or more. Doesn't seem like the most attractive time to become a millionaire. It doesn't seem like that's the type of market that's going to make a millionaire. This was touched on in the video that I'm tagging that this topic has been, the commentary I'm covering. They said the same thing in the video because they were focused more on the stock market in that conversation. When you think about it economically across the board, money is typically slowing down and in some cases being evaporated out of the system. That in itself would inherently make it probably harder for people to be more financially successful at that time. On the contrary, let's talk about the last 10 to 12 years. We'll call it somewhere around 2009 to 2012. It was hard. You could throw a rock at an asset and get back gold. Like you literally could, there was almost nothing you couldn't bet on. The stock market did amazing numbers. Real estate was a slam dunk for the most part, long or short-term rentals or primary residences. Crypto did great. Down the line, credit was really cheap and available. My suspicion is that the last 10 years probably created a ton of millionaires during an economic bull cycle. Where we're headed right now, we have delinquency rates up on credit cards, auto loans. It's not really showing, but people are behind significantly on their mortgages, and all of these numbers are creeping up. You have credit getting harder to get, to access, or, being reserved for those with the prime financials, the best financials, best credit, best banking relationships, etc. Most experience in investment markets. When you think about it, when you put down what I just laid out, and when you watch the same video at one renter at a time, it's basically we're all laying out the same scenario where recessions are hard. And I wanted to touch on this and clarify, not just for slight entertainment purposes, but for usefulness, informative and useful, for you to start understanding that you have to be careful about what you consume, and you have to be careful about what you base your financial planning on, your investment strategies on. You should be building up your finances for every economic cycle. That is number one. Number two is that recessions and economic downturns usually spur fear, and they strike up a conservative nature. You're not going to take the same risk in most cases during an economic crash. You think about the concept of trying to buy assets at a discount. When do you know that they're done going down? Don't worry, I'll wait for your answer. You don't know when they're done going down until they're done going down. So you can't really say, or it's not very wise to promote this idea that people get rich in recessions like it's just a slam dunk gimme, when clearly it's obvious that people do really well. Almost any and everybody made money in real estate. Any and everybody made money in the stock market if they stayed in it long enough and were in the right areas. And the same thing with crypto. Everybody did well. Almost everybody did well the last 8, 10, 12 years in any one of these asset classes. Hence why we're in what's called an asset bubble at this current point in time. So when you turn around and say economically, all of these assets are suffering, or at least compressed, and you don't know when they're going to start going down further, how much further they're going to go down, and when they're going to stop, then you have people who are in debt, people who are losing their jobs, their income isn't stable, they have less access to credit in many cases. And then if you're not some kind of genius or genie in a bottle, you can't find an investment market that you can really get comfortable and throw all your eggs in. The concept of dollar cost averaging through in this situation is fine if you got the assets to do it. But the concept that you're just going to become a millionaire from that by itself, is hit or miss. So this is valuable because we all need to understand how economic cycles work. And we need to have a better financial literacy around how money works. What I just described to you is just one of those cliches that I can assure you, if you say that around hundreds of thousands, if not millions of people around the USA, they're all gonna be like, yeah, man, yeah, recessions make millionaires, man. You gotta buy on a dip. Cool. You turn around and ask them to explain what that means. How does that work out? I can assure you most of them are not gonna have an educated response to it. So for those of you watching this video, it's very important that you understand that you need to pad your financials and position your financials at all times during all economic cycles. This is not a great time to take a mini risk, if any at all. Now, if you're a seasoned investor or you have a great coach or great leadership or something of that nature, or whatever the case may be, then of course there's opportunities out there. I can assure you, on an average case basis, John and Jane Doe investor, if they got any kind of sense, are not diving into the stock market or real estate right now, even crypto, and not expecting the risk of losing their shirts, because it's too hard to tell where things are going. You don't know when the bottom's coming in, especially right now. We're in the hottest economic time probably in U.S. history. We have inflation going on, the Federal Reserve compressing the economy's out of whack. Certain parts of it are really strong, certain parts of it are fragile. So please be careful what you consume and how you take it in and what you're running around parroting. Because the reality of the situation is, recessions are not guaranteed slam dunks to create millionaires or create the financial prosperity for anybody. So unless you're in the right asset class, got the right financial situation, recessions are hell. So I just wanted to bring this in because I thought it was a really, really solid topic. And I thought it was one of those cliches that most of us that are educated in the space need to touch on and bring to you as our audience to stir up these conversations and just to make you think more objectively when you hear these things, and be careful how you structure your finances around the information you consume. So to all my pioneers out there, I appreciate you for tuning in. I enjoy bringing you this content. I want you to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.